Yeah, Kelly, an accelerated day of this reset that's been going on for weeks, if not months. And what do I mean by that? Well, it's the large cap indexes sort of catching down to the experience of the average over the last 5 or 6 weeks or so. Today, it's mostly those mega caps that have taken the S&P 500 back to where it first traded in late June. So you've essentially swept aside 3 months worth of that grinding uptrend that was largely attributed to some of those big growth stocks. Along the way, a couple of relevant streaks have now ended. We were talking about it was one of the 12 longest periods of time without at least a 5% pullback in market history. That's over. What comes next? Well, historically, you do have some further extension to the downside, 8%, 10%. Half the time you get a regular correction, but never in history was it the ultimate peak of a bull market when one of those streaks ended. Also, 7 straight months of gains for the S&P is also swept by the wayside. What does it mean, I guess, on a going forward basis? We're seeing the growth stocks have their kind of reckoning and coming back to the pack. Really, the average stock has gone sideways for a while right now. Small cap stocks, the equal weighted kind of large cap universe, the banks, the energy stocks. So there's a lot of push pull under the surface. Obviously, we have third quarter earnings that might be getting trimmed further before we rebuild the chance to have upside surprises. And then naturally, all the policy noise out there, it seems as if we're setting ourselves up to get some kind of relief with just anything getting done in D.C.